Hi all, this is a review of my Euro New Zealand trade I did today on the 15 minutes. Now, as with all the other trades I was looking at this week, I start from my higher time frame picks for the week, and this is in my list as a weekly mover. In particular, I expect a weekly move up. So I expect the next weekly candle, that is this current weekly candle, to be a green one. So I wanted to trade that move and catch it from a lower time frame perspective. And in that picture, I saw that on the 15 minutes there was a very good buys coming up, sells coming down, and buys coming up over here, taking out this resistance, and a slower pullback by the sellers over here. So I was looking to catch this buy. Now I think the problem was in this particular trade especially, I was just too trigger happy and was just looking for a trade. So when I saw this over here, I was just really too keen and was looking to trade something in this setup, because this setup was so close to going. I was just I was not logical and did not think, hey, the large support area is actually here. Ideally, I should wait for the price to test this area first. I was not thinking like that, unfortunately. I just was looking for a way. I was looking for some sort of excuse to get in, and the excuse I sort of based mine on was, in this consolidation, the buyers seem a little bit stronger, but really, in retrospect, it seems this is just not enough to initiate the big buys. This sort of consolidation is not enough, and in fact, it was not quite happening at a very logical level. It was happening just above over here, when the more logical level was actually right around here. So I think due to those reasons, this was just not an ideal trade. And but the entry did have some logic. It's just that I held on to this trade, thinking it was ready to go on the higher time frame, that is 15 minutes, when in fact it was just ready to go on the 1 minute, and after that it was not ready at all. So my entry was based on a very good move up by the buyers. Again, I was looking at this resistance, and I saw that this resistance, the more times this is tested and the more times it fails to perform, the better it was for me. That was my thinking. But so once this buy came up and it made a higher low, I thought, and then I thought, let me see how buys react from over here, because price is congested. Prices come down here after a bit of congestion. Therefore, I wanted to see what the reaction would be from this congestion. Even though this congestion did not make lower lows, I gave some weight to it, which I think may have been logical, but maybe not as well. So I'll have to do some thinking on that, because otherwise I may have been able to just catch the entry right over here. So once I saw this reaction by the sellers, showing that this congestion, this resistance, could not really perform and break this low, that's when I got in with stops below this low, which was logical, and due to spread, my entry was over here. Now price went up, and again from this resistance zone, I should have known that this resistance was not quite cleared. It was only that this resistance went a bit up, that the price went a bit above this resistance, but the ultimate resistance over here was not quite cleared. So that's price came down very sharply, and I just got out right there at, I think, yes, I got out at this blue line, when on my broker price actually spiked down. So it was a small loss over here on this one. So overall, I can see that, my higher time frame read was indeed correct, And based on my higher time frame picks for the last week, I saw that a lot of my higher time frame picks actually did play out. So my overall read is correct. And it seems that I just have to work a little bit on the timing now. And my timing was good before, but I'm sort of getting confused in knowing what exactly is the correct kind of structure that tells me it is ready to go. So I'm having a little bit confusion about that after maybe focusing too much on the accumulation and distribution sort of sections of price action, such as here. So I'm maybe focusing a bit too much on that and not really focusing on the obvious ones, which would pop out as being ready to go. So this one was absolutely not ready to go because the buyers were not very strong at all in this sort of section. I only saw reasons, made up reasons, to think that the buyers had what it takes when I went down to the lower time frames, which of course is a very common mistake that I should be wary of, and that's why the stick to a limited time frames principle comes in. But I choose to be aware of that principle and instead fix that from first principles by understanding that in this particular case that particular read was wrong, and that I can still go and travel through different time frames as long as my overall picture initially is correct, and in this case it wasn't. So I view that as the overall as the core mistake. That is, my overall higher time frame picture, in this case the 15 minutes, was incorrect. Therefore my trade was mismanaged on the lower time frames. I think I viewed that as the mistake. I don't view the I just jumped too many time frames thing as a mistake. So I find that a bit too generic, and in many cases having a multiple time frames perspective has helped me tremendously. So in this case, it looks like if I had just even played very in a sort of standard way and just took my entry with stops below this low on this time frame, I could have just ridden this huge move up, because as we see here, it was just one move down to get sell liquidity from this more logical support that was needed. And this more logical support comes from the fact that this is a more relevant higher time frame support, rather than over here, which is not very clearly visible on this time frame. Therefore, the support over here was from congestion zones from lower time frames, which of course hold less weight. So I think that's the key lesson over here. And for future trades, in order to give myself a chance to get back in tune with the best timing, I am going to extend my stop losses a little bit and place my stop losses based on higher time frames, but still try and catch the most precise entries I can, but protect myself from higher time frames. This is for two reasons. Number one, my overall read from higher time frames has been quite excellent recently, and so I would like to still benefit from that and ride the profits. And number two, it allows me some margin of error to be a bit wrong in the best timing on the lower time frames, and learn from that sort of mistake, but be protected by the higher time frame view kicking in for my trades. So that's my goal for next trade, for the next few trades. That is larger stop losses based on higher time frame pictures, but still trying for the most precise entries on the lower time frames. And once I get more confidence with that, with the perfect entries, I will actually squeeze in the stops once again. So this is just to get back in tune with the entries. Thanks, and comments and questions are very much welcome.